Hey all, welcome to ShareTreck. This is Raj here, friends. Ginkgo Bioworks reported their earnings, and I want to do a quick review. And I don't think it's looking good. Let's get started. Welcome back, friends. Usually, when an earning report comes, I spend a lot of time trying to understand it. I'm always enthusiastic, and I try to find something positive. But this particular report from Ginkgo Bioworks, I had a look at it and I didn't even feel like doing any analysis on their income statement or balance sheet. There are a couple of paragraphs in their earnings release that immediately put me off. I want to show them to you, and I don't think Ginkgo Bioworks is moving in the right direction, at least not based on their earnings call right now. Maybe they have some magic in their up their sleeve, which they will reveal later on. But at this point of time, I'm just going to sell whatever Ginkgo I have and rather put that on any AI stock and take the risk out there because it's not looking good. Well, let's go to the paragraphs I was talking about. We are in the earnings report for Ginkgo Bioworks on their own website. And of course, Jason Kelly has been upbeat. He says 2023 was a breakout year for Ginkgo. We are working to build a durable platform, etc., etc., etc. He's touting all the big names that they have, like Boehringer, Merck, Novo Nordisk, and Pfizer, etc., etc. And it's saying that I'm also thrilled to see a real ecosystem building around Ginkgo. We are honored by the trust placed in us by the terrific founders of Patch Biosciences, Reveri, and Proof Diagnostics to bring their technologies to customers. So they just took over these three companies, and I was talking about this in my previous video. If you have not seen my video yesterday on Ginkgo, my point was that those companies were small and they had a direct relationship with their founders. The founders were involved in it. They had the original concepts. The founders had the original concept and motivation to drive the companies to reach somewhere, either to be acquired or to reach their goal. And with their limited budget, they were very, very conscious that they had to reach the goals. And now that Ginkgo Bioworks has taken over those three companies, among many others that it has taken over in the last so many years, what happens is that the focus and the thirst and hunger to succeed in those companies kind of dies off. And people are all looking at what's going to happen to their careers, how they are going to fit in with the new organization, what will be the priority for them in the new organization. All those factors come in. I mean, these companies are not just assets to be bought on the balance sheet. They are actually people with career aspirations, with career goals, and financial aspirations. When so many companies are taken over, I was talking about that particular soft aspect of Ginkgo Bioworks, which I think I'm very uncomfortable with. The company culture, how these taken over companies fit into the overall organizational hierarchy, so that everyone is happy and everyone is working towards the common goal, making the synergy happen. Those are the things that I was unhappy about, and I can see proof in today's earnings result, in my opinion, that things are not working out the way they should. 1 plus 1 is not becoming 3, which is what synergy is supposed to be. Now 1 plus 1 is becoming 0.75 or 0.5. Let's see the proof in the earnings report. So if we were to scroll down further, let's forget about all these 78 new cell engineering programs and all that stuff. I consider those things to be noise. The actual message is out here. Fourth quarter 2023 total revenue of 35 million, down from 98 million in the comparable period last year, a decrease of 65%. And driven down by the K-12 testing in Ginkgo Biosecurity segment. So basically the COVID pandemic died down and the revenues have gone down. Same thing happened to Pfizer. Same thing happened to a few other companies which had a huge build up in their value, but Ginkgo didn't even have that kind of build up in the value. Next, if we look at full year 2023 revenues of 251 million, down from 478 million in the prior year, a decrease of 47% as biosecurity revenue transitioned from K-12 testing to a more recurring business model. And full year 2023 cell engineering revenue of 144 million remained stable over the period, representing a 31% growth. Full year biosecurity revenue of 108 million, down from 334 million in the previous year, is a decrease of 68%, with the full year 2023 biosecurity gross profit margin of 50%. Now, I believe they are saying that the biosecurity model is going to become a recurring revenue model. So that could kind of form a floor for them in terms of revenue. But I don't think things are working out well. This is a huge drop in revenue. And they are saying they expect total revenue of 215 to 235 million in 2024. And yeah, I'm not happy with this whole thing. I don't even feel like going through the balance sheet and look at the numbers, because qualitatively I would have expected some amount of narrative on how they are integrating all these companies that they have taken over and forming a cohesive organization. To me, it's more important how they harness the synergies. Earlier, much earlier, maybe a year ago, I was talking about wanting to hear about how they are rationalizing the capital so that there is no duplication of resources, like they can have common resources that can be shared and realize the synergies of cost sharing among all the companies that they had taken over. And at that time, I was also talking about how these companies fit into Ginkgo hierarchy in terms of salaries and other things, because all the people who work in a company need to feel that they're all working towards a common goal, and they need to fit into the organization structure appropriately. And always there is organization cultures. When you're taking three different organizations from outside and merging it with Ginkgo Bioworks, the organization culture has to work out. So looking at the earnings release, given the fact that I haven't seen any comment about organization culture and how the I would say compensation structures and other things, any color that they would have given on that would have made me feel that the CEO is looking in that direction. And I'm thinking that this company is just spending money, it's taking money and spending money, and they haven't proved anything. So many companies did COVID testing. There are so many people who had the diagnostics and other things set up. It's not something unique or unusual. And I was putting more stock on their foundry and the API models, but we are not seeing as much growth as would be needed in those areas to justify the values. And they are also giving stock options to employees who have joined, even if they are restricted stock. But still, it's all equity dilution, in my opinion. And we are not too far away from the $1 mark. Anything below $1 is going to earn the risk of them having to go to OTC like SQZ Biotech did. They need to shore up their share price, and any reverse split again would be something that would not be good, because whenever a reverse split happens, it happens because the share price is very low, and it will take it back up against above the $1 mark, and then it will start falling again. So I'm thinking that overall, I don't like what I see with Ginkgo Bioworks. Once they prove themselves, I'm willing to come back again. I have around 2,000 shares of Ginkgo Biowork in one of my portfolio. Just going to sell them, book the loss, and get rid of it, because I after this earnings release, I don't think I have the patience to look at it here. There are much better opportunities in AI. There are much better opportunities in the Mag6. And even within the CRISPR space, there are much better opportunities than Ginkgo Bioworks, in my opinion. We got Caribou Biosciences out there, and we have Editas, we have Verve. So something or the other would work out. This is too much of drama and too little outcome for me. I have been very patient with Ginkgo Bioworks for a while. I might be proved totally wrong. I'm a retail investor. What do I know, right? But this is what I feel. So I'm negative on Ginkgo Bioworks going forward until they prove themselves otherwise. So that's all from me, my friends. And I would like to hear from you what you think about Ginkgo Bioworks. Put it in the comment, so that if you have some positive thesis out there which I have not considered, I would like to be motivated by that. So that's how I feel about Ginkgo Bioworks. I'm anyway going to continue finishing off those 4 videos that I was going to make about their AAV projects, how they are improving AAVs for their clients, because I think that's a very interesting space to be in, and most of the companies in our genomic watch list are going to want to buy AAV as long as they have the current delivery mechanism and until something new is not found out. And it seems to me that Ginkgo Bioworks is working towards removing all those reasons because of which AAV and lentiviral vectors are not being preferred. They're trying to modify the structure of the AAVs, and they are trying to modify the appearance of the AAV so that they can dodge the immune system and persist for longer. So those are all good things in my books. So I'm going to watch that, whether Ginkgo will be able to deliver on the good idea. That's the proof I'm looking forward to in order to believe in Ginkgo Bioworks again. So I'll continue making videos on Ginkgo Bioworks, but my personal investment is off the table for Ginkgo. So that's all from me for now, and I'll catch up with you again in the next video. See you later.